Konnichiwa, traders. Welcome to the Flow Show. Morning, Kate, and welcome back, Stel.
Hello. So nice,
so
nice to meet up with you guys. Seriously, it was such a pleasure.
Yeah, very nice to meet you too, mate, and get some of the other Fin Twitters out and about, and some of our roomies. Very
Indeed.
nice, very nice evening all round. Did you have to dig yourself out of the snow when you got home?
You know what? It was where I live, very close to the sea. There was very, very little snow 3-4 days ago. There's absolutely nothing now, so it's all normal.
Yeah, back out in your surfboard already then.
Exactly.
Good stuff. So glad you enjoyed your trip to London. Hopefully you did a bit for retail sales this month. We'll see if those numbers come in booming next month. Right, obviously lots to talk about, including obviously what's happening in the yen and Japan. As you can see from the chart there, we've been up and down the mountain. There's plenty more trips up and down that mountain, I think, before we know where we're going. So let's get stuck right into it. Just going to start with a bit of data watching from around the globe. Starting with China, CPI data out, rising to 2.1%, a slight miss year on year, but still higher than last month.
Ryan, what do you think about this number? 2% inflation in China as a principle, you know? I mean,
we got to think of it in terms of what happened elsewhere. They had the virus, shutdowns, lockdowns. There has been an impact. Even this CPI number is said to be partly driven by the lunar holiday that they just had New Year. It is something we're going to have to keep an eye. Where's the old chart gone? I don't know where the chart is. It is something that we're going to have to keep an eye on because it might be playing a bit of catch up. And it's going to be something that China's going to look at. It's obviously, low.
I was going to say, I think the trajectory now, specifically since they're opening up, should be considerably higher. But obviously, who knows, and who can believe? I don't want to use that word, but who can believe this number? I don't know. Let's see.
Yeah, I was going to look for a chart, but as you can see, running backwards, it's been. It hasn't really gone anywhere. It's been there or thereabouts. It's been pretty steady. It's, ticked up a bit, ticked down a bit over the last year or so. It's a different beast over there, though, inflation. It's not like you see here. They can do a lot more to contain prices. They control fuel prices, for example. It's not market related, if you know what I mean. It's not market.
Yeah. Good point, actually. Good point.
So that's one of the things there. But it is something they'll keep an eye on. That we should take for definite, and it could mean the difference between whether they ease policy further to help the economy, or go the other way if they do see inflation picking up as they reopen. Then we get PPI data, and that's much softer than expected and softer than last month. So, it's a bit of a mixed picture still over there. I think it's going to take a few months to sort out. But as I say, even that jump in inflation was said to be part due to obviously the easing of COVID stuff and the holiday that they had. So, definitely one to keep an eye on. We have heard rumour that they might be looking to cut rates or ease policy in this quarter, next quarter. So I think it's finally balanced. Let's put it that way. Which way they might go on that. Well, I think we'll leave the Japanese stuff to last this time. I usually do it early on, but we'll leave it till last because there's lots to talk about there. So we'll just chip through some of the other data as well. We've got GDP Q4 numbers from the UK there. GDP coming in on expected 0.4% year on year, quarter on quarter, flat, as we already knew. The monthly number was out as well for December, and that was a little worse than expected. So that may put a bit of downside pressure on the growth story. But it was a bit of a better picture in industrial production, which came in at 0.3% versus minus 0.2 expected. Year on year, not as bad as expected. Manufacturing came in flat, which some might call a bit of results, and is expected to come in minus 0.2, and again, year on year, not as bad as expected. So I think that pretty much sums up the UK and probably a lot of countries at the moment. Flat numbers coming out, nothing major either way. No deep recessions, no boom times either, and that's going to keep going, I feel, as we move through the next few months. The RBA, their minutes were out, and they expect further rate hikes will be needed to bring down inflation. They see uncertainties around the outlook and the level where rates need to go to. They did revise up their forecast for core inflation, wage growth, GDP, and they left the unemployment outlook little changed. So just a bit of a follow-up to the RBA meeting that we had. As mentioned during the show yesterday, just to repeat, the Bank of England mob were in Parliament, a committee hearing on the MPR, the Monetary Policy Report, that was issued alongside the meeting last week. Temreva had the choice comment saying that where she sees herself now, she would consider a rate cut, but can't say at which meeting she would vote for this. She is one of the big doves. Last two meetings voted to keep rates unchanged, even while we're potentially looking for another hike, talking about cuts. And quite surprising, because even some of the doves on some of the other central banks are not talking about cuts yet. They don't want that language even coming into the discussion. So the fact that potentially she could vote for a cut at any time is a bit bonkers, if you ask me.
Well, we've been talking about the Bank of England being dovish at every opportunity. Obviously, this was not an opportunity I could envisage, let's say, but you know, it's incredible. They will. I know it's only one person, the most dovish person on the MPC, but still, they seem to be the ones that are the most dovish, the earliest possible. You know, we're talking about hiking rates still, and there's one member, like you said, talking about cutting. It's crazy, but this is what it is.
Yeah, this is what the market is. And you say, I mean, the pound is still largely holding up since all that came out, probably more to do with what's going on in yields and the dollar and everything else. And even gaining some against the euro. But yeah, it's bonkers talk. Speaking of bonkers, let's go to the ECB. And Nagel has called for decisive action to reduce the risk of the anchoring of inflation expectations, and says there's still some ground to cover with interest rates. Again, the ECB, as I say, different to the Bank of England. They won't do any sort of loosening of the tongue. They will push their message as strong and as hard and as much as they can to keep inflation expectations from becoming too high in the market, because that helps drive inflation. So inflation expectations are a big part of the ECB's mandate. Fed's Barkin says inflation is likely past its peak, but is still elevated. That's good analysis there, seeing as it peaked about 9 months ago. Mexico, they surprised by raising their rate by 50 pips to 11% in a unanimous decision. The market was expecting a 25 pip hike. Lots of news coming out of Russia, and some big headlines putting oil on the bid. Russia's Novak energy minister said that they will voluntarily cut oil production by 500 barrels per day in March. This is due to the price cap being threatened. They say the price cap on Russian oil and oil products is interference in market relations, and Russia will not sell oil to those directly or indirectly who adhere to the price cap. They won't also comply with any price caps, and perhaps surprisingly, they didn't consult this move with OPEC Plus members. So that's been one of the reasons for the big jump in oil, that they're going to be cutting 500k barrels per day. A bit of a surprise move there. Right, let's get stuck into Japan. So what do we know so far? Well, Officially, unofficially, it's now official. The government will present the new nominees for the governor and deputy governors to Parliament on February the 14th. That's been confirmed now by Kishida. The time touted is, I think, 11 a.m. Japan time, which is 2 a.m. GMT. Then after that, it's said that the ruling party and opposition parties will consider conducting a hearing for those governors and deputy governors in the lower house on February the 24th. Suzuki still doesn't know anything because he says he's not heard any decision on when the government will present Parliament the nominees. But as I say, Kishida has come out not so long ago and confirmed it. Kuroda was also speaking and said monetary easing didn't boost wages in the past decade, and they will keep up easing for as long as needed to achieve the price goal. One of the nominees or potential nominees who may not be a nominee anymore, Amamiya, said it's appropriate to maintain current ultra-loose monetary policy and sees no need now to make the YCC more flexible. Now, what caused all the ruckus in the end this morning? Well, Nikkei dropped a bit of a bombshell saying that an ex-Bank of Japan man, Kuzo Ueda, may be the choice to take over at the Bank of Japan. He was on the board between 1998 and 2005, so he's been in the job before. He's a special advisor still to the Bank of Japan, been on various economic committees, so on and so forth. But it has been a bit of a curveball for the market because literally no one was expecting this name to be dropped. I don't even think it's been mentioned at all, hardly, in the last few months as a potential candidate. And if it has, a lot of people have brushed over it. And the press were quick to get round his place of work or kick his front door in to find out what he had to say. And he said that nothing has been decided when asked if he'd be nominated. And when he was asked what he would do, should he be employed in the role, said it's important to make decisions logically and explain clearly. That is a bit of a clue because one of Kishida's points for the new governor is that they are good at communication. So we're in a bit of a no smoke without fire on this one, I think, boys and girls. And the fact that he wasn't thrown out any no comments is a bit telling as well. Kay, you've just before I bring you in, the Nikkei story pretty much ruled out that Amamiya would be going for put himself in the hat anyway. So he could be ruled out, part of the reason for that move there, because he was seen as Kuroda Mark II. You had a couple of calls to your contacts in Japan. What was the story?
The funny thing is that everybody was as surprised as we were, because Ueda was on zero lists, right? So I suspect he must be Kishida's drinking brother or bartender where he hangs out at night. But no, seriously, we didn't know what to expect with the guy. He has been the early part of the early zero interest rate policy crew. So I was a bit surprised. Well, no, there's two things. I was not surprised at the reaction of the dollar yen and the JGB futures because Amamiya got ruled out. But then nobody knew, including myself, what Ueda really means for the for the policy going forward. The one before he spoke, there's been two names as well named as the possible deputy governors, Uchida and Himino. To start with Himino, no idea what that person means for monetary policy. But interesting is that the person said a couple of times that banks should find new ways to support their business. So in my opinion, that's dovish, because the regional banks have been really suffering from negative interest rate policies. And the fact of saying that means like means really saying like, you sort it out. We are going to do our monetary policy.
Yeah, get on with it.
And then Uchida has been, just following the group move. Really, never been really vocal against the current monetary policy. So it was really a question mark. So we really had to wait for Ueda to really talk himself, and the fact that he has given comments means that somewhere he felt the need to clarify a little bit his stance. Probably having his wife saying like 100 times this morning, "Are you going to pick up that bloody phone?" Made him say, "All right, maybe I should say something about what I think we should do." Now, there's two things that you brought up. The second one, the first one, though, that he said is that he thought that current monetary policy was correct. So, and the second thing is we have to communicate going forward, whatever. Nothing has been decided. He has to say that because there's nothing will be decided until the hearings after the 24th of February. So that's a bit of a kind of an official line saying he can't say today that he's going to be the next Bank of Japan governor, but he didn't deny the fact that he was approached. So that's already one thing.
It was funny watching the price action when it all happened. This big red candle was when the Nikkei post dropped, and then you had this little bit of whiffing around while everyone jumped on Google to find out who it was, and then they read some prior comments, that he'd been talking about, prior things that he said about wages and the like, and the market thought, right, well, this isn't Kuroda Mark II. Amamiya's out the picture as well, so it's going to be more hawkish, and then it dumped here, and then this big fat candle. This green one here was him saying that Bank of Japan monetary policy is appropriate and they need to continue easy policy. So that put him right back in Kuroda's shoes again. And voila, back we went. So fun and games,
Yeah, what we know right now is that the guy is going to be not a Kuroda Mark II, because he has probably, and as Kishida already was saying, he has probably been asked when contacted, saying like, can you lead Bank of Japan out of zero interest rate policy, and how is it going to be? I mean, are you able to do the job? The fact that he's commenting, it seems that he accepts the nomination. So now it's up to the party to decide. But the thing it does seem to filter through that he's going to lead the Bank of Japan out of negative interest rate, and perhaps relaxing a bit this YCC, and then see what happens on all the other plans. But I'm pretty sure that Kishida is also talking to the nominee in the sense that, but be careful, because we need a massive amount of funding. So at the end, I mean, running forward on the events a little bit, it's my base case is still the same. Bank of Japan is likely going to try to get out of this whole monetary policy, but at a much slower pace than anywhere else. So base case is for me that we can still see yen appreciate in the shorter term, because if the expectations of Bank of Japan leading going out of the very strict and easy monetary policy will probably have the Japanese whales do a bit more of reshuffling, and the speculators trying to hammer the JGB yields through that 0.5%. So that could have an effect, but then the longer it goes, I think this effect will wane, and because the Bank of Japan will always be slower than anyone else. But so that's the base case for now. And in fact, Ueda is just going to do what the market and we have been expecting for weeks and a few months now, is that they are in a slow process of normalization.
Yeah, exactly. And I think it's also telling, because we've got to think of it we've got to think of the risk going forward. Okay, we've seen the yen move around, flip-flop around, whatever you like. You've got to look at the risk still of just this news alone. Kishida was out, as I say, just before we started the flow show, saying that I forgot what he said. What did he say, Kay? He was saying something, but he didn't confirm or deny. He didn't come out with a line that said we haven't made a decision. He wasn't questioned about it, or if he did, he didn't answer to say we haven't made a decision on the nominee. He hasn't put it down. No officials in Japan have stepped on this rumor, which again might be telling, but it is still just a rumor. And we have to be wary of that, because a denial could come out at any time. Over the weekend, Japan, it's evening time now in Japan, so there's a risk maybe Sunday, early Monday morning, we get something out of Asia saying, oh no, it's not going to happen, we haven't picked anyone, and the market's going to flip around again. So what you need to take from these moves is the reaction in yen pairs, depending on whether the person who's thrown up is seen as hawkish or dovish, if they're Kuroda or not Kuroda. And the market's going to move that way. So that tells you what it's going to do, i.e. someone they think is hawkish, you're going to see yen pairs falling. Someone they think is in Kuroda's shadow, you're going to see that it gaining. But that is then going to have a confirmation move once the person is picked. Once we know exactly who it is, we're going to get a confirmation move. Then the market's going to look, it's going to want to hear the first words out of the mouth of whoever it is, to then get an idea, are they hawkish, are they dovish, are they confirming to what we expect them to be? So there's going to be all this jumpiness about leading into next week still. So it's not a case of, oh, this is the man and we run with it. This still may all change around. And as traders, you've got to look at where your risk lies with that. Then once we know who it is and we've heard the lines, the market will set itself in motion, pricing in what it expects from the Bank of Japan going forward. Now, if that's a dovish slant, thinking that it's going to be the same old, then we're likely to see yen pairs rally. Then we move into the phase of watching the data. Is inflation going to keep going the way it's going? Are we going to get these wage hikes, so on and so forth? So the monetary policy trade will happen thereafter. So it's important you know the stages of this if you're trading yen, because, as I say, markets are going to be up and down until we get some certainties from all this. Whew, lots to go on this morning. I was trying to do my notes, and all these headlines kept dropping, and I had to keep jumping off to see what was going on. I didn't trade any of it. Such was the speed at which anything went. But that's life. Right, so what's going on elsewhere? Euro dollar having a little mooch again at the 107 level. Let's get that zoomed out, get in the right one. Doing more walking around the ranges for now. A little look there at 107 again. We had that move early in this week, cleaned out a few of the week longs into that 107 area. Are we going to do it again, or are we going to hold it? I've been saying all week I didn't like these bounces. They're looking very dead cattish, and I think that still remains the case. We're not out the woods here. If we do break down here, then it could be the low 106s we see next, maybe even more. Should it happen, we get something down to this the old big 105 area, I'm going to be getting a bit interested. But I've got my sniper rifle out. I'm not looking to take any sort of big positions, just trade between the levels. Same thing for cable, really. Holding up maybe a bit better than the euro. We're not close to the 120 like the euro was to the 107. But we've come pretty swiftly off that move to 122. So, just trying to work out what he wants to do at 121 at the moment. Aussie dollar, another one, said it needed to get above that 70 handle and, make hay, and it didn't. He had a little look, didn't like what it saw, and now we're pretty much just come all the way down there to the 69 handle. So I'm still not ready to believe that this move down that we saw in the euro as well and everything else since the US data last Friday, I don't think we're done perhaps with the downsides here. We've tried to get above these levels. I said it'll be hard work again. It has proven to be the case. So I still think maybe we may be having a little look lower, but we'll wait and see what happens. One trade which finally has gone my way is dollar yuan, flapping around under here. My buy stop, which has got triggered over here, 680.50. Now got a bit of money in that. I'm going to be looking for a move maybe up to 83, this prior high, takes them off the table, puts them in the bank. I may do some anyway, just to put some money in the bank. What's your view at the moment, lads? I mean, still, you're probably not doing an awful lot, having just been back from holiday and whatnot.
China.
Are you keeping your eye on silver, I assume?
Yeah, I mean, I've been in touch with markets when I wasn't at Harry Potter or walking on Hyde Park, but I still think next week's CPI, US CPI number is going to be hugely important. It's the most important number of the month for me. And remember, there's a calculation change, et cetera, et cetera. I think we're going to see a reading lower than expectations. We're expecting to drop, I think, 0.3% year on year. I think it could be as much as a whole percentage point. I know I sound crazy, but that's what I think is going to happen. I could be wrong, but my view regarding metals. For those of you who were in the chat room, I did start very, very slowly. I just took a quarter position long earlier this week. 22.48, if I recall, and I want to keep adding. I don't want to be caught without any position when this goes. So I'm just starting very slowly. I'm going to keep adding all the way down to 19 if we get there. But my view overall is that I think following the payrolls number from last week, we probably continue to see a little bit more of this move continue. So dollar probably inching a little bit higher, equities inching a little bit lower. But having said all that, going into the CPI next week, I don't think we're going to see any big moves now. We're 2 days away, 2 trading days away. And I think that the market's anxious to see what's going to happen because, again, it's a big binary event. If inflation comes in line or even higher, I think it's going to be the final nail in the coffin. And I do think that risk is going to get really slammed. Because let's face it, equities have been quite resilient, even with everything that's been going on and Powell telling us we're going to keep fighting inflation, et cetera, et cetera. The S&P is above 4,000 points, which is not too bad considering what's happened over the past year. So if Tuesday's number is in line or higher, I think we see a big old smack in the markets. I think that's going to be the trigger. The markets have been trying to deny a hawkish talk from the Fed, and I think that they no longer will be able to do that if the market comes in hot. Having said that, I don't think it will. I think it's going to come in quite a bit lower. So I think we're going to see a lift in risk, but going into it, I probably think we just inch maybe a little bit lower. But overall, I don't have much to do. I am still looking at the Norwegian kroner, and with the Norway inflation, which you didn't mention, Ryan, shame on you, which came in higher than expected today. So CPI came in at 7% year on year, up from 5.9 and expected 6.5. So that's a big old beat in CPI, and I'm still seeing the krona being pretty stable today, which is surprising. So I want to sell into strength on Euro Norway and Dollar Norway. I'm debating when to do that, but probably not going to do anything ahead of next week's inflation print.
Yeah, lovely.
But overall, I'm just getting back into markets, just trying to understand what's going on and get back into it.
Yeah, I know it's like when you have a few days off, you need to watch prices for a while, don't you, just to get back in the rhythm of things.
Yeah, so, and I never go on holidays, so I mean, come on, it's difficult for me.
Never. I've got that. We've all got that on tape, folks. Still never goes on holidays. You wait next week. Oh, yeah, I'll be doing a flow show from a catamaran on the island somewhere. Yeah.
That's going to be May.
We know the story.
May.
Right, one pair we need to keep an eye on today, or one currency we need to keep an eye on today, is the CAD. We've got the CAD jobs report today at 1:30 GMT. Market is looking for an employment change of up 15k. That was versus a booming 104k last month. Unemployment rate is expected to tick up to 5.1% from 5.0%. We'll obviously keep an eye on the participation rate, which was 65% last time. After that, we've got University of Michigan flash sentiment readings there. But for CAD, I'm keeping an eye on this one. We've got a bit of a zone here around 60, 70. We can't get above. I've been waiting a while to see if we get a look at 135 for potentially a short up to this old fib level here. But I'm going to be careful with this one because we might be pretty close going into jobs numbers, and if it's a stinker, it'll probably take out 135, and might even get up to 136. So I'm going to keep an eye on that. Also, conversely, you got to look at the downside if it's a good number. You know, we've tried to get down here before, couldn't. 133. You know, it seems every time we look at it, it's got a 133 handle on it at the moment. So a move down towards these lows on a big beat might be good for a little long play. So I'm going to keep an eye on that. So I've got my level set. We'll see what happens with that one. I'm sure Kay's going to be looking closely for his Euro CAD. Do you want to have a little run round?
Yeah. Okay. Yeah, first of all, let's since you brought it up, let's have a look at this EuroCAD. Then yesterday, I'm actually out of my position because yesterday I thought this level should have held on the top side 144.40, and it didn't. Of course, it didn't completely run away and had a little dabble in it, but I don't have any specific position in it ahead of the unemployment data. The thing is, every time we're expecting some serious setback on those Canadian employment data, but they keep on surprising. Again, last month was a big surprise. I'm also keeping a close eye on the balance between full and part-time employment, because that, to me, is somewhere cementing the viability or not of any move derived from the headline number. But anyway, I think this 144.40 and then above there 65.75 is going to be important again on the Euro Canada. If in turn we start to break below 143.5, then I think this double top formation could finally reach its destination in the low 142s. And as for the Canadian report on dollar CAD, I have absolutely no view and no intention to even trade it, because I find it so trading in between the goalposts and trying to take one side and trying to take the other, and then oil and gas is pushing it around. I don't want to trade dollar CAD because the dollar and the CAD could have the same kind of impact, and we are seeing it actually. If you look at across like this Euro CAD, and then you look at stuff like the Euro dollar, it's not miles away from how the Euro dollar scenario looks. Then speaking about what Stelios was saying on a quick look at the metals. So gold finally broken that trend line here. We may be on our way to mid 18s, perhaps 1830 again. Keep an eye on the top side here, 1875. But I don't know if the market really wants to do a lot with it before the US CPI. The US CPI will be, of course, the the most important data point of next week. By the way, Stelios, are you still there?
Yes, I am, sir.
On this change of method of the CPI, could you put something in our newsroom to
yes, of course,
to show what is actually changing in the methodology? I think they're going to a 1 year on 1 year.
1 year sample instead of a 2-year sample. So that
right. So
if we think of
shortening that may mean that we get a bigger drop.
Exactly, because your reference point from last year is going to be 2022, right? Which is a higher rate of inflation overall of prices.
Okay, so we're in for a bit of saloon doors then on the CPI next week. Because imagine it comes lower, but compared to the new methodology, it could have been lower. So you're going to have like the perfect saloon door trading there on the dollar, perhaps next Tuesday.
Yes, I'm going to post something now on the news and research chat room.
Thank you. So silver, we've been talking about this 22 zone. We had a quick drop below. Right now we're trading around 22.10. So this zone is probably going to be very important where we end up after the CPI next week. I'm still very, very, very patient. Imagine we are having, despite expectations, a sticky or surprise to the top side. There's nothing preventing this from dropping another buck or even a buck and a half. Where we'll see about that. Euro dollar, you have already covered that, Ryan. On the dollar yen, yeah. So it's still the same as yesterday, really. There is this. Oh no, that's euro dollar. Sorry. On the dollar yen, I was going to go. So yes, we both have this 129.80 here, which where it stopped dead on it this morning. So that's going to be a level to reckon with. Bit of a intraday or intra move, double top forming here around 131.85. Looking at the volatility of the yen, those are really your markers. One can now put back the 130.40 in the frame, perhaps because that's where it really halted on the first leg lower this morning, and then we did the extra bit. But again, preparing for next week and for the nominations and everything, I think now the 132.70, 133.05 could be our new 134.5 here, because we've seen quite a bit of traffic. So this is one I'm going to monitor very closely going into the next week. For today, I'm really not looking at doing much at all. First of all, because it's Friday. Secondly, because the market may just be in a adjusting position mode already, not wanting too much risk into the weekend. But there's one I'm going to have a look at later on, because I'm finding it relatively interesting. Euromex. So as people know, I've been short from around here, and then I bought some back yesterday. I actually completely missed Banxico. So I had the surprise finding that my take profit was done on parts of my shorts here at 2015. I'm keeping a core short. I think this is ready for a move lower soon, but I'm keeping room in the books to add perhaps again already around 2025 when I got back. I'm going to be in short. I'm in really short-term stabs when I see a bit of a rally, sell some, buy some back, but not really worth mentioning as a real position. But I still think this is pretty well-oriented downside. We have to respect, of course, those levels. It's around our lows today. Call it 2008, something like that. It's also the prior low here. Yeah, so that's about it on the Euromex. I still think that like an 11% currency, it's tough to be long of it, especially for as long as the data in Mexico, and we've seen yesterday's the Mexican CPI came out a little bit stronger, and Mexico immediately reacted to it. So this is not something to fight yet, in my opinion. Yeah, I wanted to mention this euro sterling, and I don't know what's happening now. Now we're starting to move away a little bit from it. We're back around yesterday's lows, but it looks like somebody has put a magnet around on this 88.5, and I don't really know why euro sterling is trading a little heavy right now, but I guess the market is still managing its positions. I'd say I'm looking to cover all the rest of my hedges against my 88.5 call if it comes down to low 88s, and then perhaps not do anything before the end of the week, but next week, if everything stays the same, perhaps starting to add a little bit of cash here as well. Yeah, as I said, it's yesterday we tried to rebound a bit, but it's finding offers here. So it's a little interesting, because I think in the more medium term this should have a final test somewhere around 90. But for the time being, keep things tight and perhaps small for as long as we haven't not a fresh real move developing. What else? Does anyone else have anything else to talk about?
I don't.
No, I'm just looking at the cable. Yeah, cable. Yesterday we had this little run through the 121.45. I was watching. I was short. I kept myself, but then looking at those levels here, I gave it a try again, short, and covered back on the way down, and I'm out of it right now. I'm not going to put anything fresh on against the weekend, but it's interesting that we are holding this 120.75.80. Again, 121.40 I think is going to be a bit of a level here, and then if we rally more, then the 122s will come into play. Yes, one I wanted to have a look at. US 10s, they are on the way back up, and we've been talking about that already a good number of times. This is the market needing to adjust the expectations still after the prior labor report, and we are in this process. We're talking about this 356, 358. That's held yesterday, and we're back higher. Also, non-major CPIs have been holding up pretty well, and I think it's dragging the whole interest rate sphere higher. We've seen also EU rates, sterling rates picking up a little bit. So keep that in mind. And but for as long as these are ticking higher, since this is the biggest market in the US, I reckon the dollar has perhaps little, not that much room to go much lower until the CPI. That's just my base feeling. And then after the CPI, it's all going to be about what's going to happen to this sphere. So and then I think we're talking about 3.75 up to 385, and then on the downside again this 356, 358. But that's music for next week. We'll have room to and time to discuss that. On the twos, that 340, that 440 I was talking about the other day. We had a retest, and it's going higher again. Keep an eye on what's happening in the mid 450s here, and then to close the week. And that's really it for me right now. Oh.
Thank you, mate. Thank you, mate. I shall
crude. Yeah, I don't have anything in crude. I mean, it's really driven around by Russia and whatever. I don't have too much of a view on that right
I was going to have a look at that, mate, if you want to grab it.
last one I wanted to mention though is dollar China, because I bought small this morning. I bought small this morning because we just because of the fact that we traded back above 680, 680 and a half. So I went in really small around 681 this morning. Just looking for a move up perhaps to 685, 86-ish. Right, back to you, Ryan.
Thank you, mate. I shall steal that because I saw Sarki's comment there. Well, you've got a nice trade there, mate. You've pretty much nailed the day's high up there. I think the big level we all know in WTI is up at this 82.50 area. You know, that's been the ceiling for a couple of months now. So that's the ultimate level. If we're above there, moving above there, and it's holding the support, then obviously we're going to be heading up higher. There's a bit of an interim level around 80, probably a 40-60, call it. So that might be your pain level in the short term. If we find a test holds these highs again, 80-30, then you're probably going to see a steeper pullback. But you know what it's like with oil; it can flip you out for a buck before it comes all the way back down again. Any more headlines along that news we heard this morning from Russia, particularly, it is a bit bullish. OPEC plus members have said they're not going to fill the gap left by Russia cutting these 500k barrels. So that's not going to send the price all the way back down again. But it depends what happens. I think a lot of the growth story is still in this. I've been a bit confused as to why oil's moved as much as it has the last few days anyway, particularly when you look at the fundamentals that are going on, China reopening and so on and so forth. So I guess you just got to play the levels, mate. As I say, got this 82.50 up here. That's your big level. Over that, you're probably wrong and going to be very wrong.
Ryan, I think for the more medium term, it's worth noting where we stopped also on the way down, right? And that's probably the reserve buyers, who are leaving bids down there. So first of all, we went to tag their 70 level, and now we have like two very clear bottoms there, just in the 72s. And I whether it's front running or the SPR buyers, but there seems to be something or somebody down there who really holds it up.
Yeah, thanks for that. And Angela, you're up in Guildford. Yeah, I know Guildford very well. And you could have popped up earlier this week, jumped on a train up to London and met us for a drink and still. But we'll definitely be having more meetings like that, I can assure you. One of our guys, Chef, he's promised us a barbecue for the last 3 years. And I keep wanting to pull him up on it. But yeah, we'll definitely have a few more meetups, either uptown or somewhere central for everyone. Maybe on the beach. Yeah, let's all go down the beach when it gets warmer.
So never then.
Oh, mate. Oh, look at that. He comes over, he shares our hospitality, clears off, and then slags us off. That's your typical foreigner. Typical foreigner. Right, well, I don't have much more to add unless you boys and girls have got any last minute requests. You guys and girls have been a bit quiet of late with your stuff. I want to hear what you lot are doing. It's all right us telling you what we're doing. I want to hear what you guys are doing. What are your views on markets? What are your views on pairs? Where do you think things are going? We want your input. I don't want to be listening to these two clowns babbling on every time. I want to hear from you guys. So get your thinking caps on for next week.
All right, that's it. That's me done with the flow show. Adios, everybody. Ryan calling me a clown. That's it. That does it to me. TGIF, everybody. Have a good weekend.
Yeah, have a good weekend, everyone. Thanks for coming to the show. We'll see you all next week. Cheers, guys.
Bye-bye.